Good day, everyone. Ali is here from Safi Financial Network. Today is October 22nd, 2022. Weekly analysis for S&P chart and S&P 500. All right. Last week we had a very volatile week due to option expiry for the month of October. And earnings season for a third quarter of this year just kicked on last week, and that would be turmoil for the market as well. So there were lots of institution game playing happening last week, and lots of volatility in different stocks, different individual names. We had a sharp sell-off for a Snap. Just after earning, went down 22%. Netflix went up almost 20% after earning, and a session after that. So this is pretty normal and usual for S&P 500. However, I'm just looking for a more volatility for the next week, especially when we are getting to the months of November. Okay, so this is S&P 500 monthly chart. And let me just clean out a bit and stay with these two moving averages, which is 50. This yellow line is 50 for the monthly chart, and also this is a pink one, 100 for SMA 100 for monthly basis. And as you see, we are defended by SMA 50 since 2011 bull market, just because here is the 2009 bottom after 2008-2009 market crash, and since after that we had bullish or secular bull market for almost 13 years, and every single time when we had a sharp sell-off or correction or even a minor correction or consolidation, SMA 50 on monthly basis kind of survived the market. Look at that. So here is 2011, pretty close in 2016, 2018, just a touch, and then reversal, flip reversal, heading to the top. February 20, COVID crash, and look at that. So this is even a sharp sell-off during the month of March, but look at the shadow, just defended by SMA 100, and then reversing back up, and this remarkable rally happened after that. So right now, again, SMA 50 defended the market. We expected that one. This is our area for a reversal, and we expected that one. Are we into a bullish momentum or bullish case, and the bottom is there? I don't think so. Basically, this is a sharp sell-off since January 2022, and I would say market just finished the first phase of its bear market, and the second phase would be after a consolidation or even a retracement to the upside, regaining the energy for the latest, or I should say for the final drop to the downside and finishing the sell-off. So my target would be 2500 to 2800. So this is the area, but this can happen, I don't know, earlier or even later than this time frame. So the one that I show is July 23 to December 23, which I think that would be the area for finishing the bear market or the bottom. But this can happen or starting in December, and capitulation, we are getting to capitulation phase, something like this, sharp sell-off coming down to this area. But for now, I would say the months of October was pretty bullish. I know lots of people are saying October is a bad month for the market, just because the history tells us October, September was a volatile month. Yes, they were volatile month, but sometimes we had a kind of reversing and then stretching to November. November, December seasonally is bullish, but we don't know. Exactly, we don't know. Just because seasonally is bullish, it doesn't mean that we will have a bullish momentum. But for now, I would say this is a MACD. And if you see, if I just zoom back here, so this is the most bearish momentum or reading in MACD even after 2009 and even after 2002. So we are at a very, very bearish momentum to the downside. And if we change the sentiment to the upside, I would say we are getting back to the rally again. Crazy, but we have time to get that, just because we are far away from SMA 20, and even when we are below SMA 20, we can't tell we are getting back to the bullish momentum. So we should close a monthly basis above SMA 20. Then I would be all long, and I wouldn't just sell anything, and I will buy any correction. But right now, any correction to the upside would be a selling opportunity, and another selling opportunity is coming. If you look at the RSI, which this box actually I show you since, I don't know, it's been a while, just because this box is there, and this is a monthly correction area. So when we are getting there since 2009, every single time that we have a correction or even sharp sell-off in 2020, then we get there to this bearish momentum. This is the last trench for the bull market. And I would say, if you look at the RSI, I'm not into that analysis, but this is very, very interesting. So we have a shoulder, we have head, and we have the right shoulder in RSI. So this tells me even a pullback to the upside. And when we are not getting off this this box, so that we are remaining bearish, and probably oversold condition would be here around below 30%. So that would be the bottom of the market. But so far we are defending the bullish momentum, which is a monthly chart, and this is going to be last trench for the bull market. And stochastic, we are just getting a monthly reversal, bull reversal to the upside, and this happens here when we had in 2008 just 3 months going up and then capitulation phase after that. So this signal actually doesn't tell me anything right now, unless we get to oversold condition in RSI as well. So with along with the price action, we can combine these 4 factors, these 3 indicators, and also the most important one, price action, is very, very important. And then we can get back to the long side, and we can call the bottom of the market. But for now, any upside would be just a selling opportunity or rebalancing your portfolio. Here is the weekly chart. A weekly chart just defended SMA 200 on the weekly basis, and here is the breakout after 2020, October 2020 and November, after Biden election took over the admin. So this is a frustrative rally to the upside, and this is a very, very technical level, to be honest. And this is a technical level we can't get up to, let me tell you. And then here is that's interesting. So we have this in weekly chart, lower low, and we have higher low in RSI, which happens a couple of times before, and this is a nice bullish signal for the market. At least a corrective move could be happening within this bear trend. Also, stochastic shows us reversal, bull reversal to the upside. So I would say last day, I mean on Friday, we can get to the daily chart as well. But last day of the week, which is Friday, this remarkable candle close prior all these last 3 weeks and even last 4 weeks closing to the downside. So which is very, very remarkable signal for the rally, and this rally could go all the way up to here. So I would say next week we will have a bullish momentum, but this bullish momentum couldn't get further, based on my calculation, couldn't get further more than 3,900 and maximum would be 39.55, and that would be it. And then we can get back to the short side when we are just getting out of this oversold condition. And also when we are getting to, I don't know, 2-3 weeks consolidation and then fail consolidation, that would be great scenario as well. Going to a daily chart. Here is the daily chart, and as you see here, we are getting to overbought condition in stochastic, which is a selling signal within this downtrend. However, price action tells me that we are we were waiting for this area, and I thought we are getting back to this area just because the price action was not that nice, but this nice rejection from the middle of this candle and then reversing back up, again going back to 37.60, which is very important level. And as you see here, this level is very important. The W pattern is forming within a 4 hours chart, 1 hour chart. So right now market is very overbought in short term time frame. And also here is the RSI. So whenever we hit this area, since August last August, I would say, we are kind of done with the market. So the bullish momentum would be finished, and then we can take more short position. Also, if you just follow my analysis, I told you this box is very important. So we are getting close to this box, and I was waiting for this box to get to the short position again. So next week, probably we will have a bullish momentum, at least for Monday, Tuesday, probably Wednesday, stretching into November. But November 2nd would be Fed Day, and that would be very critical for the market because of the verbiage. Everyone knows that Powell and the team is going to increase the rate 75 basis in months of November. And they're just talking about the December tone, and Fed just blink. Probably we are slowing down in rate increase. Still they are increasing, but they're slowing down the increase. So it doesn't tell me anything. It just says that okay, they are just slowing down, but still they are increasing, and market is getting tight just because inflation is high, and Fed don't care about the stock market. And yeah, I think pretty much I wrapped up everything. Next video I'm gonna tell about the sentiment. Lots of indicators I'm gonna talk about, so make sure watch the next video as well, because these two videos are coming together and complete the analysis for this week. Make sure watch the sentiment video. That would be very great and fruitful for you folks. Hope you have a wonderful weekend. See you on the chart. Bye bye.